April 15th, I have just come off April 15th. For those who had to listen to me this morning, I apologize, you got to listen to me again. For those who are listening to me the first time, I promise we'll be out of here by 7 o'clock. I know I've got to stick to my time limit, but I don't even know what I have on these slides, so I'm just going to wing it. My first title was Minimizing Taxes on Timber, and I'm like, that's kind of dull. So I spruced it up and added maximizing deductions and minimizing taxes on timber. So let's get started. What are your objectives? You're all timber owners or you wouldn't be here. You need a good planning team, and I had one man complaining to me outside. He said, everybody wants me to get an attorney and then get a forester and then get this and get this. And said one guy said you need 10 people, and I said, well, they all 10 need to eat. So, you know, you need to get some people to help you. But are you just going to enjoy your forest land just for outdoor activities? Maybe you want to protect nature, biological diversity. You may be interested in a conservation easement. You may want to grow your forest products for sale. That's where a good CPA can help you. You may just want to provide a legacy for your heirs. Nothing wrong with that. You may want to save your timber company, your timber, so that if you run into some financial struggles down the road, you go cut a tract, sell it. All right, how are you going to meet these objectives? You need a financial plan, you need a forest plan, and you need an estate plan. All right, now, I worked on this presentation the day after tax season. I was going to put some beautiful, trees or some kind of cutouts in there. Yeah, I never got around to that because I wound up driving down here in the rain yesterday. But to develop and implement a good plan, you should get your attorney involved. You should have a consulting forester. And of course, you need a good accountant to help you. All right. As the forest owner, you've got to lead, because I'm going to tell you, if you just hire me to go manage your timberland and you don't keep an eye on me, it's going to cost you a whole lot more for me to implement this plan, and you're probably not even going to get the results that you were hoping for. See what I tell you, that slide does not lie. If you give up the leadership, it's more costly and you don't meet your objectives. All right, financial planning. Are you growing the timber for sale? I'm sure most of you are. And you want to make sure that you maximize your return on investment. All right, if you're just going to enjoy the forest, then that's for your personal use. You don't really get tax benefits from that. You do get to deduct the property taxes that you pay on this property. But if you're a standard deductor, you don't even get the benefit of the property taxes. All right, how can you get the maximum advantage? Well, first, you need to work with your consulting forester. Develop a management plan. If you're going to be in the business of raising and selling timber so that you can maximize your benefits, you need a forest management plan. Now, it's called a profit motive. Now, it doesn't mean you're profitable every year, but that's what you need. You need to have a profit motive while you're operating your timber business. All right, how can you get the maximum advantage? Work with your accountant. I'm not in here trying to pick up everybody in here as a new client. Everybody in here has accountants. You've worked with them for years. Just make sure that he or she knows what they are doing to make sure that you get the maximum benefits. Have a detailed record-keeping system. If the IRS selects you for audit and they say, we want to see your records, you can't say, okay, give me about a month and I'll have them to you. Because they're going to know you're fixing to fabricate something that Hollywood would be proud of. You just need to say, where do I overnight it? That way they know you're actually keeping up with it. And you got to distinguish between expenditures. What money are you spending so that you can get a return on your investment? They are deductible. But if you're just spending money for the enjoyment of your forestry, forest land, then it's not deductible. All right, I mentioned this at 9 o'clock. Tax avoidance is not tax evasion. That's what you hire me for. I want to make sure you're not paying any more tax than you're supposed to. Now, oh, I forgot to ask, anybody in here wish they would pay more tax? If so, you don't need to stay in here. All right, we'll continue on. But it's my goal to make sure you pay only the amount of tax that the government requires. As I said earlier, evasion, ooh, Treasury does not like that. You'll be able to spend some quality time in a federal facility, not of your choosing either. All right, purpose of the timber. Why are you holding this timber? Personal use, investment, business, it does make a difference. If it's an investment, you still need to have a profit motive. It's not really your principal source of income. You do have a job. Maybe you're retired and you're getting plenty of retirement to live on, but you're selling timber just as an investment. Yeah, and you can even be an absentee owner. I know we have a lot of out-of-state people here that own Alabama timberland. Nothing wrong with you owning timberland for an investment. When you sell it, normally you pay the 15% tax, capital gains tax. It goes on Schedule D. Well, now, because of a thing called Affordable Care Act, this capital gain is now subject to an additional 3.8%. What if it's a business? Same thing, it's still a profit motive. You manage the property. You actively participate in the business. All right, here's the trick to this. You sell the same tract of timber, it's reported on Form 4797 as ordinary income. But it gets transferred to Schedule D so that you get the capital gain of 15%, and it does not go to Form 8960 where you have to pay the additional 3.8%. But that's only if you're in the timber business. If you're in timber for an investment, it is subject to the extra 3.8%. All right, tax rate on net capital gain, qualified dividends. Congress is even thinking about just making all dividends and interest ordinary income, so that if you're at the 35% rate, instead of paying 15%, you just pay 35% on your dividends and your interest. Nobody wants to do that. All right, beginning in 2013, you had the extra 0.9% of additional Medicare tax that was applied to the Medicare wages, railroad retirement. I don't know why they singled out railroad retirement, but Congress in its infinite wisdom, anybody in here from Congress? In their infinite wisdom, they did it. You see the thresholds where you have to start paying the additional amount. Since 2013, some of you in here may already be paying the 3.8% additional tax on your capital gains. If you are, I hope your accountant sat down with you and explained why you're paying more tax now than you did last year, year before. All right, what is net investment income? Okay, you see it's the gross income from taxable interest, dividends, annuities, royalties, rents, other blah, 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 blah. This is easier to read. It's interest, dividends, annuities, royalties, rents, income from passive activities, income from trading financial instruments and commodities. Look at this last one. Disposition of property other than income derived from any trade or business. What? Trade or business? I'm in the timber business. So that means my capital gains from the sale of my timber is not considered net investment income. Therefore, it does not have the extra 3.8% tax taken out of it. Yes, sir?
Question. In cases where your timber is held in an LLC, which typically is going to generate a K-1, how do you qualify for the exclusion on the disposition of property?
Because you actively participate in your LLC, and so your K-1 will be coded active instead of passive.
That's only going to apply then for the manager of the
Not
LLC.
necessarily.
You have to meet the.
99.9% of the time, yes.
Okay.
But I mean, everybody could be active in the LLC.
Right.
All right, here's an example. Both people are retired. From 2012 to 2014, you actually paid less tax. And you're like, ooh, that's not too bad. Well, the reason you paid less is your exemptions went up. So, you know, you're reporting $300 less of taxable income, so you pay less. Uh-oh. All right, example 2, you got one working, one retired. Now, the Social Security, I have it highlighted because, you know, not all Social Security is taxable. But in this example, you went from paying $59,000 on the same income to paying $61,000 on the same income. Now, you know, y'all may be so filthy rich, you're like, $2,000, I carry that around in my wallet. Well, I should have been in the timber business because the CPAs don't carry that kind of money around in their wallet. Let's look at another example. One working, one retired. Now, see these capital gains up here? Now you're paying $25,000 more on the same income from 2012 to 2014. Nothing's changed. Same income, same exemptions. Well, your exemptions get phased out when you got that much income, but you're paying an extra $25,000 on the same taxable income. All right, from now on, this is going to be freebie because I'm trying to teach you how to save taxes. Not necessarily this is timber related, but you may have stock that you got at a very low basis. You're very charitable. You want to give money to your church. You can give them this stock that has very low basis. They can take the stock and sell it for $20,000. You get the $20,000 deduction without paying gain on the stock that you just gave to your church. Now, if you sell the stock, you're going to pay tax on the gain, then you're giving them the same $20,000 plus whatever the tax was that you had to make up for the difference. All right, standard deductions. And I told this story earlier. See this note down here, if you're married filing separately, if one of you itemized, the other one has itemized, if one of you standard. I had a client, they're still my client, unfortunately. They can't stand each other. For 11 months out of the year, they love each other. They were walking hand in hand down the road. But come tax time, they know they're going to have to send Uncle Sam some money. He wants her to send it. She wants him to send it. And they're on the verge of divorce every April 1st. Well, she came to me, and of course you file depending on December 31st. Are you married then? That's when you file. She came to me and she said, I'm ready to file my taxes. She had $4,000 worth of itemized deductions, and I said, okay, you'll go with the standard. And she went, no, I'm going to go with itemized. And I said, that doesn't make sense. You pay less tax if you use the standard deduction. She went, oh no, my husband has no itemized deductions. She filed her return. He had to file his return with 0 itemized deductions. He didn't get the standard deduction either. He wound up paying a whole lot more tax than he thought he was going to have to. Love is a splendid thing. Okay, gifting. You can gift $14,000. If I had my checkbook, I could write everybody in here a check for $14,000. Well, they bounced. I can't on what. I could give everybody in here a check for $14,000. No tax to me, no tax to you. If my wife was here and she didn't kill me, we could write a $28,000 check to everybody. Of course, we'd have to gift split and file a return to do that. That's where the $28,000 comes from. All right, estate return. Last year, if you were worth more than $5.34 million, you had a taxable estate. This year, because of inflation, it's been indexed for inflation, it's up to 5.43. You've got a 6-month automatic extension if you can't get all your paperwork in. The problem is that's not an extension to pay. That's just an extension to file. Portability. This word right here is the most powerful word in the IRS code right now. You can die, and if everything you own goes to your surviving spouse, you pay no tax when you die. She can die right now worth $10.86 million and not pay any tax. Now, the only cost is she will have to file what we call a DSUI return. You have to file an estate return for you, elect portability, so that your unused exemption will go to her. And, you know, depending on who files it for you, you're probably looking at $3,000, $4,000 for the return. But in the long run, it could save you $500, $600, $1 million worth of tax. So that's a very good return on your investment. All right, timber and land. I deal with a lot of clients who own a lot of timberland. I don't see this as much now, but a 2032A election allows you to take this valuable timberland and reduce the value. That's why it's called special use valuation. Right now, the limit is 1.1 million, so you could actually reduce your estate value by that much. But be careful, because if your children are greedy and they want to take this timber and sell it as fast as possible and get that new car down on the lot that they saw, you don't need to make a 2032A election, because you have to hold that property for 10 years from the date of your death. Once the 10 years is up, they can sell it and do whatever they want to with it. Now, extension to pay, a 61-66 election. You've heard of land rich and cash poor. You may die with a lot of timberland, but you may not actually have the money to pay the tax. The government will work with you. You've got 15 years to pay the tax. You make this election, you pay interest the first 5 years, then you start paying principal and interest on what your estate tax is. All right, charitable bequests are deductible on your estate return, provided they're in your last will and testament. That's why I have it highlighted in red. Several times I've worked on an estate return and they're like, well, Mama wanted to give, $1 million to the church. Well, Mama should have put it in her will, because we can't do it. I mean, you can do it. You can write the church $1 million check, but it's not deductible on your estate. Last resort, you can just tell the IRS to take you off their mailing list.